Hello, everyone, and welcome to the Dollar Auction Show with Shimon and Alex. How is it going, Alex? Long time no episode.
Long time no episode indeed. 8 months or 9 months or so. We've been slacking. We've been burying the Bitcoin bear market. That's what I say.
Yes, well, it's funny that you should say Bitcoin bear market. Probably the average price of the last 8 months was like 100,000 or something. So Bitcoin's doing pretty well overall, but definitely big dips along the way.
I put my hand upon your hips. When Bitcoin dips, it dips. That's what they say. That's how I'm going to rewrite that song from the 90s or 2000s or whatever it was.
Yeah, no, but in all seriousness, the sentiment, I really don't. I mean, I kind of understand it. We should talk about like why the sentiment is the way
Yeah.
it is, but I mean, overall, if you look at where we were like a year ago, we were flat. 2 years ago, it's like 60% up. So yes, we're 30 or so percent or 35% below the all-time high. But the all-time high, we just touched it for a while. So we're only like less than 10% below the average of the last year. So I don't see the reason for panic. And also the dips, yes, they were painful in terms of dollar terms. So you had a day now, a couple of days ago, where it went down $5,000 in one day, which is like a lot, right? But overall, I think in percentage terms, if you take into account the frequency and the depth of the dips, I think we're getting better and better, like less volatile over time.
Well,
So I
yeah.
don't understand why people are so upset.
Well, I think we're definitely getting less volatile over time. We can check the facts. We can check it with the standard deviations and so on. I mean, we haven't prepared anything for the show, but if someone's curious and wants to fact check us, you can do it. There's plenty published on Bitcoin volatility. Second, I think why are people worried and panicked? Look, it's a very unsettling market. It's a very unsettling macro environment. It's a very unsettling Fed environment. It's a unsettling fiscal environment with Trump and tariffs and so on. Again, you could be all for tariffs, but saying tariff, then no tariff, then tariff, then no tariff, and the markets are jittery. And the fact that the I know the Fed is supposed to be independent, but there's clear animosity between Trump and Powell. So, and there's all these expectations that this will be the year where Bitcoin really, this is the blow up top year, and it hasn't really had it. So there are compounding factors, right? Whales selling. I think a big aspect is the AI narrative, people going into AI. There were the digital asset treasury companies, which the irony is high for me. All the Bitcoiner maxis hated ICOs in 2017, and the digital asset treasury companies are essentially ICOs. They're the same shit coins, just in a different wrapper that all the
Mhm.
maxis hated, but now they're all chasing them. You had things going at 12, 10 MNAV. You had David Bailey posting, literally buying the Pico top and saying, I'm going to smash buy $1 billion as if that's some sort of accomplishment, and then writing a stock down from, I forgot what it was, $20 down to 54 cents. Okay, literally classic rug pull, but not even rug pull, just complete amateur hour,
Mhm.
mismanagement of what it takes to run a public company. Sorry, it's just true. Um, so, we've gone through the Binance crash on October 10th, where they had one of the stable coins depegged, and then they were using the wrong oracle for pricing information, and then broke structure on some bunch of funds. It
Cross
hasn't been any
margin. Whoever
cross
thought of
margin
cross
again.
margin should get the nomination for Genius of the Universe.
Exactly. No, but so look, it's been an unstable market. Plus, there's a lot of instability with the regular market. So I think people are jittery. I mean, you expected one thing, and it was everything but that one thing, and all the different permutations of anything but. So it's hard.
Yeah, this reminds me. Elon Musk has a saying about like nature, whether we live in a simulation or not. Somehow, life tends to favor the outcome that's most ironic, and he
Yes.
has like many examples of that, which is pretty cool. But yeah, like, look, I completely agree with you about the last point you said about people expected a blow off top, right? This is like a very, you could debate whether the cycle, I mean, look, I'm not a statistician. You could say that the cycles, because it happened twice in the past, that it's only two data points. I've heard other people say no, it's like infinite data points because it's the pattern literally repeats, and so like you can map year over year, each time they match up, that's a new data point. Those are like the two extremes. From my perspective, I'm starting to think of it as I was actually having some deep thoughts about like who are the people that outperform the market and why, and like bucketing them into different like buckets, right? So you have people that just take a really big risk and then they get a really big reward, and then you only hear about the ones that succeeded, and that's okay, right? But then you have something else, which is like you have people that just like compounded something that's risky, and those tend to be very very wealthy. So basically not like taking a huge risk, but also not compounding just like the S&P 500. Or so you think of like someone who made $1 billion in real estate, right? What is making $1 billion in real estate? It's like you just keep compounding something risky, but like doing the same thing over and over again. And your thesis, right? The real estate thesis is like from the 80s, I don't know, interest rates were 12%. And then they went down to zero during COVID. So like for 40 years, you could just ride. You could just like keep refinancing your mortgages, right? Having tenants or whatever. And yeah, lots of people made lots of money in real estate. But the idea was they were compounding a simple idea that's a little bit more risky than just the stock market. And honestly, I think that's what Bitcoin will become. And I personally have enough where I'm happy with it being a little bit boring. Like, I'm happy with it if it just outperforms the stock market by like 50%. So, like, let's say the stock
Yeah.
market does 12%. If Bitcoin can do like 18%, like, but like on a very, very kind of steady clip with volatility, but steady clip, then you can borrow at 7%, right? And then you can get to 20% maybe. That's great. That's a great investment. You can make a lot of money with that without doing crazy stuff like treasury companies or like, all these like crazy where people lost all their money. I mean, I'm sorry, I just hold Bitcoin, so I got kind of shielded a little bit. What do you think of that? Of the idea of like just compounding something that's a little bit risky? Uh,
Well, yeah, this is Warren Buffett's time in the market versus timing the market. Before I answer that, though, I have a question for you. In your classification of great traders, where would you classify Nancy Pelosi?
Nancy Pelosi is the best. That's I would class. Nancy Pelosi. The most similar thing to me is like a startup founder, and I'll tell you why. So a startup founder, you get like a little bit of money to prove the idea. Then you get a little bit of traction. Then you raise more money based on like what you're going to do in the future. Then you use that money to get more traction and so forth. I think politicians are the same. It's like you get a little bit of traction, you get donations, you use those donations to get more traction. At the end, you start like using your political influence to benefit the people that donated you, just like the VCs benefit from the founder. The only problem is that this is the expense of the taxpayer, right? So you can bet on a young politician, that's like a seed investment, or you can bet on one of the two president's candidates, that's more like an index fund, and
You're
you have
conveniently
everything in between.
you're conveniently overlooking the insider trading portion of Nancy Pelosi's magnificent trading career. But other than that, yes, definitely like a startup with insider information that knows exactly what's going to happen in the market. Ah, Pelosi Inc.
That's great. But I
Um,
just wanted to raise the other points that you raised about why people are nervous. I actually kind of disagree with those people because, like, look, the stock market is pretty close to all-time highs. Yes, there was a little bit of uncertainty with the tariffs, like on and off, and like there was a lot of kind of volatility. But like, I really don't think that overall you could say that this administration is driving the stock market in a different way than any other administration, really. Like, they do stuff. It, creates panics, creates news that people get too excited about AI or whatever. But like overall, it's all kind of the same. All I care about is that we're close to all-time highs. And yeah, like is Nvidia in a bubble? I don't really care. But is the Nasdaq, am I happy to invest more in the Nasdaq now?
mhm.
Sure, because I'm gonna hold it for 20 years, you know?
Well, Yeah, this is where you and I differ. When I go companies and you go index, and ultimately at the end of the day, index is safer because it incorporates the changes in companies. Mine is more risky, but potentially has more upside because like Nvidia grows faster than the Nasdaq.
Hmm.
Um, look, you're well. We should talk about Nvidia. We should talk about the AI kind of bubble or not, because I think it's a very interesting point that people are saying, "Oh, there's an AI bubble" and so on. And Michael Burry, there's a lot of places to go here, but um, yeah, look, holding on to the Nasdaq is smart. Going into Bitcoin, I was gonna say you're 18% year over year, 20% year over year. It's nice, but it not be nice as a risk adjustment return after some point. And it's definitely not. It's already not. It's becoming not the fastest horse in the race. Because if
Wait,
you,
can we dive into that? What do you mean, not the fastest horse in the race?
yeah. So we talked about the principle of investing, of saying, okay, look, if you have capital, you want to diversify and you want to preserve. If you don't have capital, you want to get to escape velocities, you want to have a concentrated bet, right? The concentrated bet now, of Bitcoin, let's say doing 10x in 5 or 6 years, that's not the fastest horse anymore. It used to be. It used to be that it wouldn't do 10x in 5 or 6 years, it would do 100x.
Yeah.
That's why it's very de-risked now. It's easier to move a $100 million asset than it is to move a $2 trillion asset. That is just physics of or law mathematics of investing. And so, what's a faster kind of race? Let's call it quantum companies, or maybe AI companies, or there are other things that are coming up.
Okay.
Palantir, maybe, right?
I see what you mean. So if I reiterate what you said is like you have a pool of capital that's only looking to deploy to the fastest kind of risky but very kind of a lot of upside, and they would have put their money in Bitcoin like last cycle, but they're not putting their money in Bitcoin this cycle. Yeah, that makes sense.
But this is actually what's happening. We
No,
know
for
this
sure.
empirically.
I'm saying it does make sense. I will just say that that should be more than offset. And I think honestly we should talk about when. I My bet is still by November next year. That should more than be offset by the institutional money that's coming, right?
Yeah.
But what's nice about it, and by the way, it's offset by definition, right? For every person that dumps, there's a person that buys. So like I'm really happy actually about all this like sideways year, because I really think that this will dampen the volatility going forward, simply because again, those people that are looking for really risky things that will look at Bitcoin and they're like, oh fuck, like the whole year passed and it's flat, I'm gonna dump it, right? And then
Yeah.
some pension fund is going to buy that same Bitcoin. Well, next time it drops by 30%, that guy would have sold. The pension fund wouldn't have sold, so the dip will stop at 30%. And that's I think the price that we pay. But you're right. I mean, it's crazy that we got in so early, and we were successful in our prediction that Bitcoin will survive. So that's why we got the upside. But now I think Bitcoin is it's a no-brainer that it'll survive, but that's why you have less upside. That being said, do you think it's still faster than the Nasdaq? I think that it's still faster
Yes.
than
For
the
now,
Nasdaq.
yes. By the way, to your point, I just looked at there's a news article, excuse me, that came out today that Fong Lee, which is the president and CEO of Strategy, MicroStrategy, talked about how large US banks want to partner with Strategy because of the biggest corporate Bitcoin holder in the world. And we know that JP Morgan, for example, is launching Bitcoin bonds. We know that this is, we're recording December 3rd. As of December 2nd, Bank of America is allowing up to 4% investment in crypto, which we all know for institutionals is Bitcoin. For their private wealth clients, Vanguard, as of December 2nd, is allowing people to buy the BlackRock ETF. So it's happening. And when it happened in, when was it? 23. I remember being in Nashville at the conference in 23 with you. And we talked about how institutionals are going to come in and wealth advisors will come in. We actually met with a bunch of wealth advisors and so on. It takes time. It
Mm-hmm.
actually takes time. I can see a year and a half, 2 years for people to start to get the wheels turning, to start catching up, and to saying, you know what, no, we should do this. We should recommend doing this, and so on and so forth. So it doesn't happen overnight. And now it's starting to happen. I think it will pick up as time goes along. And I think I know we said November next year, but if we look out 2, 3, 4 years, we're going to look back on this and say it's kind of like looking back on Uber, and it was like, what do you mean? You know, what do you mean there was no Uber? Or even now we look at the app and like, what do you mean it was only black car service? Remember when it first came out, it was black car service. It took
Mm-hmm.
30 minutes to get it. It was like a whole deal. They were being fought off. Uber was being fought off in nearly every major city in
Mm-hmm.
the world. You can't be here. You're gonna encroach on taxis and so on and so forth. Literally, we're going through this. This happens to every new technology. And I'll say
Yeah.
one last thing. I wish I had this chart, but there was a great chart of horses versus cars in the 19th century. I think it was like
Mm-hmm.
1910 to 1925. 15 years it took for a complete flip from
It's the S
horses to
curve,
cars.
right? The
Yeah,
S
one
curve.
goes down, one goes up. That's it. It's just, but 15 years, we're on a much faster time scale given all the technological changes that we have now. So I can absolutely see Bitcoin going from, 100,000 to a million, going from, 2 trillion to a $20 trillion asset, which is, global gold a few years ago, in 5 years.
Yeah.
It's starting to happen. We're starting to hit this mass acceleration, and then it will decelerate.
Yeah, and I wanted to say first of all about technology. What I love about technology as a sector, right? Like, is that they shoot for things that are 10 times better, and so then it cuts through regulation. I saw a really heartwarming tweet today, which is this kind of like public health official. I don't remember from which county or city in the U.S. And they said, look, this is Waymo's data about how many pedestrians are hit per mile, right? It's 10 times less than cars per mile driven, and yet the cities are blocking Waymo. So DC and she mentioned two cities, DC and Dallas or something, are blocking Waymo. We have to sue them that this is a public health concern. It's literally children being hit by cars because of your regulation not allowing the safer
Crazy.
technology.
This is crazy.
And that's what I love about technology, which is like, yeah, you can go against it, but then eventually it's so much better that you just like flip over. And Bitcoin is the mother of all such technologies because it's literally better than anything else as a store of value. And it's like with
Well, it's
every
flipping money. It's
it's
flipping the
flipping money
underlying
and
infrastructure.
gold. Yeah, like if you think of gold, the best thing about gold is that it was like globally distributed. So like kind of like all the kingdoms and empires had like an equal share, and so they could agree on using it, and also it only grew by like 2% per year. And that's why literally for all of humanity's history this is money. Like you could claim that even the fiat system, it's like, yeah, they gave themselves the ability to print, but they still held a lot of that stuff, right? A lot of gold. And so now it's just like that, only it doesn't grow at all. Instead of
Well,
growing 2%, it grows by 0%. So why wouldn't you use it? You would literally become much
well,
wealthier. You would get an army and you
listen.
would conquer
Yeah,
the other nation that doesn't hold it. Now, I'm talking about like, maybe 100 years from now. But don't you think that people think about that? Like, don't you think that the best minds and
I
governments are
don't.
thinking about that?
I mean, in
Even if it's
governments,
politically unpopular, so they can't like, actually do stuff about it. But I just think it's a better technology, just like Waymo hits less kids, than drivers.
okay, yes, better technology, yes, in government. But let's come back to that. Um, no, I don't think people think about it. I do think that this is a big, very, very big idea where you have like a Kindle that comes in and kills the book. And it's like, okay, well, can I read a Kindle? Can I read a book? Yes, it's better to have a Kindle because it has more stuff on it. There's a backlight. I don't have to have a light on. When I read it, I can have my whole library there and I don't have to carry it around. An e-reader absolutely drives value to the consumer, but in a very small kind of non-critical category.
Hmm.
What Bitcoin is doing is flipping the most fundamental layer of our society. If in the one of the most fundamental is commerce, and what is money? That's it's going after that. This is the moonshot of all moonshots. It's going after for the kill shot. And yeah, of course it's gonna be volatile. Like you're not going after books or e-readers here, right? You're not like creating a better, I don't know, bookmark. Even an iPhone, it's like, oh well, now you know we created a phone, which is a revolution, right? Because it's in your pocket versus the Nokia's there before. Major, major revolution. but that's still only a sliver of society. This is money. This is
Hmm.
everything. And I do want to. I look. I disagree with you on gold. It maybe has grown 2% per year, but in the last year, it's rocketed up in a serious way.
I'm talking about the supply of gold growing by
The
2%,
supply of gold got it.
and the
You got
supply of Bitcoin growing by 0%. So it's just much better. It's
it.
just
Ish.
over time.
Zero ish. It's not going at zero. It's going at. We can look at the inflation rate,
Yeah,
but it's
like over
decreasing.
time
Yeah.
tends towards.
Yeah. It absolutely tends to zero.
So anyway, look, you can disagree in the sense that I agree. It's a much more fundamental shift. You could claim that it's like electricity, and that took much more than 15
Yeah.
years. Like I think we spoke about that in a previous
And it,
podcast, where it takes like 70 years for something like electricity to have a full impact on the economy. Because
yeah.
you know, uh, but uh, but yeah, Bitcoin is already like what 15 years old, so
Let's go, Bitcoin. Don't be late. That's the
like
quote.
the full impact, I think I feel very strongly about $100 trillion, which is the kind of monetary value of stuff that's non-speculative, which puts it at what, like 20 million per Bitcoin, or what is it? No,
Yeah, it's about 2 trillion now. You said 100 trillion,
I said no, I said yeah, 100 trillion, so 50 times.
50x
Yeah,
times
so
a hundred
five,
thousand.
so 5 million. Yeah, so that I feel comfortable with within kind of like my lifetime, because it's just better at that,
Yeah.
and I have 70 years from inception of Bitcoin till before I die. So that's my bet. But no, honestly, I think it's also good that we're breaking that 4 year cycle, because like I think unless something very, very, very strange happens, the cycle will be broken, right? Unless we suddenly go to like 200K like before the end of the year. But that's
What if
also
we
very
do? Well, what if we do? What if we do? So, are you more? Do you want it to be broken more, and then us to go in January, or would you want it to be? Because it's also trivial, right? Let's say it doesn't go in December 31st, but goes in January 10th. Is that breaking the cycle or not? And do you want the cycle to be broken, or do you want to, still have a nice little top and or whatever, chase the number?
I think my ideal scenario would be just flat, but of course I would take the 200K.
But what if
Because
it crashes?
exactly. So I would take the 200K, then I would sell a little bit, and then hope to buy at a lower price after the crash. And that's in a sense less ideal for me, because who knows? Like it's emotionally it's gonna be harder, but of course I prefer it, because like 200K now is better than any uncertain future. What about you?
I don't know. I always debate myself. Look, number go up feels good. The hedonistic for me is like, yes, I don't know. I hope it. I would take a slow and steady, just nice little increase. Before, you and I would talk privately. I really wanted to go and do the whole thing again, and there's some comfort in predictability. But now it's like, yeah, I don't know. Either way, what I just don't want to happen is to crash to 70 for too long. I don't want people to get shaken out of the market. I don't want there to be any big blow ups, even though we should be much more resilient. It's just not a good look. People get hurt, and this is when politicians come after us, and it's just like this is too much of a. I really believe this is too much of a tool for human freedom and for human prosperity that I don't want it to get ruined. Um, and it can. There's paper Bitcoin. There's co-opting it by BlackRock. There is co-opting by the governments. There is equivalency to the manipulation of gold. So I don't know. I would love for it to be just be. Grow nice and easy.
Yeah,
Chug along at 40% per year. Do, do,
I
do,
know
do.
of a really cool guy that wrote a book about all these ways that it could be co-opted and why it won't happen. That cool guy is me, and the book is called The Privatization of Money.
That
And
is
that's exactly what I talk about, which is like, yeah, of course the governments could stop Bitcoin, but again, I think that now the one of the good things about the Trump presidency is that basically it bought us time. It at best you could say it's neutral. Like even if he doesn't do anything, he
at
doesn't
worst.
buy
It's
any new
neutral.
Bitcoin. What? No, the
You mean?
worst.
Yeah,
Exactly. At worst, it's neutral. So we know that they're not going to be hostile to Bitcoin because, like, they have family dealings, like Lutnick and all these guys. So, like, I don't think they would just, like, for spite be hostile
yeah.
to Bitcoin. So either they do nothing or they do the good things, and then it will be, I think, much harder to break because, like, in my book, I write about this game theory of, like, any government that would start imposing sanctions against Bitcoin, or start to hurt it in any way, if it doesn't coordinate with other governments, it's just going to hurt itself. And so I think by now it's distributed enough. I think that it's very hard to coordinate. Let's say if you wanted to make a list of all the big governments that have exposure to Bitcoin and get them to agree on, like, let's crash it to 10K, that's very hard. I think it would be very hard to do and not important enough. That's the other thing that I talk about, which is, like, by the time the opponents of it realize how dangerous it is, it's going to be too late because we're still very small. They're still allowing gold to exist.
When
Like
you
in
say
my
how
book, I
dangerous, can you elaborate? Because it sounds like nefarious. I don't think
well,
it's good
dangerous in the
for.
sense that, like, people on the left think that the government printing money, it's like a really important tool, and if you remove that tool, it basically causes suffering. So, like, I'll give you an example. The Great Depression, there's this big debate whether what FDR did, which is took unemployed people and literally gave them useless jobs of go plant trees in the middle of nowhere.
Yeah,
And I drove through these trees. I think I mentioned this on a podcast like many years ago with you, but, like, I literally went to see the eclipse in Wyoming, and it was a really cool experience. 2017 or 18, and we drove for 3 hours through a forest that was all man-made, all planted, and there was a big plaque, Tennessee Valley Authority, which is the government institution started by FDR. It took all the unemployed people, employed them in planting these, like, useless trees. And then there's two camps of thought, right? The left thinks this is what saved the economy, because otherwise people would have stayed unemployed and gotten depressed, and, like, this cycle of, like, it's really hard for you
yeah,
to get back to work. Versus people on the right say, no, he just prolonged the depression because they would have been employed on, like, the Empire State Building was built in the middle of the Great Depression. They had cheap labor because, like, lots of unemployment means cheap labor, right? And so then they could, like, immediately jumpstart the economy, and within fewer years, right? Um, the people would have been at a much better place than planting trees. Now, I don't know who's right in that debate. I know which side I'm on, in the sense that I'm on the right? So I think that the government should not intervene. But the people on the left, let's say China, by the time this becomes something that actually prevents them from printing money and giving it to people to plant trees in the middle of nowhere, it's going to be really hard to get all the other countries that have all the investments and all the JP Morgan that is going to be lending against it and stuff. So it bought us time, because there will be people that try to stop it, but I don't think they'll be powerful enough now. It would have been really dangerous, like in 2017, 18. I don't know. Like back then, I think they could really crush it.
yeah. Because it was also smaller. Yeah, look, and I don't think anybody is crushing it now. Obviously, the institutions are stepping in. The question is, then what's going to happen? Can it go the route of gold? It's interesting, right? When the gold ETF came out, it was all on the up and up for what, 20 years, something along those lines, 10, 20 years. I don't know, can it go the route of
Yes.
gold? No, but yes, yeah,
Yeah.
but here's the thing. But now gold is stagnated completely.
It's not, though. That's the thing. It stagnated for like 5 years or whatever, 8 years. But now I just heard a podcast about it today. Gold is at 4,000, right? So you can suppress the price for years, but not too many years. Because what happens is, like, when you suppress the price, it means you're selling, right? You're dumping gold. If China's central bank is buying your gold, eventually you'll be like, okay, fuck, like, I don't want to sell them anymore. And then the price goes up. It's $4,000 an ounce.
This
So I
sounds
think
like
gold.
technical analysis.
No, so I'm happy you mentioned that too, because it's like, if people were to crash it, I completely agree that BlackRock and stuff, and people, Michael Saylor could crash it. Like, imagine Michael Saylor, if he wanted, like, let's say he could, like, borrow $20 billion, crash the price by 50% easily, like one
Yeah,
tweet, and then go in big. Now, maybe he doesn't want to do it because he's a moral guy and he's one guy. But if you're BlackRock and you have shareholders and all of that, then you get to do it. Now, the question is, to what price do you crash the price, right? Let's say you can dump enough. You give your trader the instruction, keep dumping. And then it's like, okay, when should I stop dumping? You have to tell them. And so I claim that the most rational thing is if you draw a trend line of all the bottoms, right? You should tell them to keep dumping only until the trend line, because if you tell them to dump above the trend line, you're leaving money on the table because your whole point is to go back in when it's cheap. But if you break the trend line, then it could just like the asset could go against you. And if you still believe in the asset, if you're just doing it short term to improve your position, it's a dangerous play. So that's why technical analysis works. It's like people who can move the market probably move it to those levels. And look, you can't argue with it. It's kind of spooky. This month, it touched the line. Last month, it touched the line. In April, it touched the line. And it's like this one line of all the bottoms since like 2012, and it hasn't been broken.
I love how you're like, it's kind of spooky. I've been trying to tell you this here for years. Now, the interesting part is a lot of the trading that happens now, most of it is algorithm trading anyway, which are programmed to do exactly this. They're literally programmed to do it. They all look at that 50-week DMA, the EMAs, they come up, it's all, yeah, it's like, where's it going to go? But I think there's, it's one of the things that I started getting into recently is kind of spirituality, even astrology, even numerology and other things. And I've been noticing at least kind of went a little bit of a personal search about myself, and I was like, oh, look at astrology signs. What does it mean with birthdays and times of birth, like deeper? It's remarkably accurate. And I did it for my kids and how to parent them. It's remarkably accurate. And like my son's description would not fit me. There's some generic stuff, but some not. Long story short, is that I really do believe there are forces in this world that exist that we just don't understand. Metaphysical, physical, it doesn't matter. I think it's the height of hubris to think that, oh, well, now we have modern science technology, we understand everything that's going on in the universe and our dimension and other dimensions, whatever it is, right? There's a great movie, by the way. I think it's called Chasing Infinity on Netflix. It's a great documentary about infinity, multiple universe hypotheses, and so on and so forth. It just opens up your mind. Long story short is, if we believe in this and we believe in the Bitcoin power law, why don't we believe in the Fibonacci numbers? If we believe them in shells and flowers and everything, why not in trading? It's the same mathematical description or enumeration of human emotions, just like we find other natural phenomena. And so this makes me kind of think, okay, well, there's probably something to it. Now, can I trade against it? Am I a good enough trader? Absolutely not. I've lost money trading every single time, literally almost every single time that I've done it. But there has to be something there. I almost refuse that. For me, the chance that there's nothing there and it's all bullshit is zero. It's like saying there are no aliens. Of course there are aliens. Of course we're not the only life. Now, have we contacted them? Who knows? But in the universe, are we the only life? It's a height of hubris to think we are. It's a height of hubris to think that, oh, TA is bullshit. The Fibonacci numbers are bullshit. The human emotions enumerated are bullshit. So the question is, what do you do with it and how do you read it? And I don't have a good example. I don't have a good answer. I don't know. Again, I'm terrible at trading. I'm not good. I'm getting some hunches about where things could go, but I'm not good. So I don't know. I think there's a lot to be said to be like, I listened to a couple of pure TA purists. um, they're very good. They don't like, there's not on one chart, 2 or 3 lines, very, very clean, very simple. None of these like RSI, stock RSI, MACD, this and that, and these averages, custom indicators, these crazy lines, like 2, 3 lines, two. It's elegant. Is there something to it? I think so.
Yeah, no, I mean, there's something to it. The question is, what's the size of the alpha for me? Like for me, I'm a good investor in things that I know that match my personality, where I can be better than other people. What is better than
Dog
other people?
shoes.
Yeah. What is better than other people? It means that I'm right when other people are wrong, and it's just like a sizable enough amount of people are wrong, right? Because like it could be like I'm right, everybody else is wrong. I mean, I'm right that the S&P 500 is a good investment, and like some people think it's not a good investment, but most people agree with it. So I think with the technical analysis, to your point, you have bots and stuff that are trading against you. You're already at a disadvantage. Like anytime I try trading like a little bit, it's like I think they're just selling my trade order book or whatever, and it's like just that's not my core competence. I don't have like computers running that. So if I'm just looking at a line, and I'm about to trade on it, I think my better advantage is to just not trade, maybe use a little bit of leverage. Like my idea of leveraged tech stocks, I pitched it. I was at a bachelor party in 2013. Just think of how QLD, you guys can look at the ticker, what it has done since 2013. And I was pitching it to everybody, and everybody was like, no, no,
Wait,
it's too.
what was the pitch? You skipped over what you were pitching.
The pitch is just buy leverage NASDAQ, like buy QLD, 2x daily NASDAQ, right? And and then people are no, no, it's stupid because it doesn't give you the 2x. It gives you less than the 2x. It's like, of course, it gives you less than the 2x. It's like 2x daily, which is less than 2x total. But do you have a better idea? Like, do
Yeah.
you have a better way to borrow money and not get a margin call or whatever? No, everybody disagreed with me. And that's why I made a lot of money on that trade. Like buying gold now is not going to make you a lot of money because it's just like, okay, everybody knows that it's kind of doing well.
Yeah.
Bitcoin is that perfect combination of something that's like big enough, but so it's not crazy risky, but it's still kind of not a very small minority of people have exposure to like have significant exposure to it. I think most people get exposure to it through the Nasdaq, through index funds that just buy MicroStrategy or whatever, IBIT, and then you could say, okay, everybody kind of agrees, even if they don't know, but they have money in it. I think we're so far from there. So then why would I sell on the technical indicator hoping to buy a little bit lower if I think we're so far from the eventual price? But that's just me. That's my personality. I'm not saying there's nothing to technical analysis. And I'm sure people, I mean, look, Jim Simmons made so much money. He's a billionaire, and it's technical analysis. It wasn't called that in the 80s, but he kept saying it's like very
Hmm.
short-term correlations
Yeah.
between things. He fed it into a computer. So yeah, that's technical, and it's analysis.
Technically, your technical
It's the
analysis.
computer doing the analysis. So
um,
it's not yeah, qualitative
let's
analysis.
let's switch gears. Let's talk a little bit about the AI bubble. Do you think it's a
Yes.
bubble?
So I think that it's hard to tell in the short term. It's really hard. Like I just sold a little bit of Nasdaq, not because I think it's a bubble, but because like I was overextended, and I just thought now is a good time to sell, kind of like all-time high. But I think there's like a couple of things. The question is it a bubble in the sense that a specific company made a specific investment that will go to zero? Absolutely. Many of these will go to zero. Many of these overextended, and they'll be just bought. You have now, even now, investments that are valued at less than zero after they happen, like crazy stuff. The question is, though, is the whole index in a bubble because of AI? And there, I very strongly feel that the answer is no, because I think that the few investments that pay out will disrupt enough SaaS companies that will go out of business and just take their value. So, like,
So
I'm betting on like literally a agent like ChatGPT, Zendesk. I don't know. I'm just thinking of companies that Silicon
Zendesk
Valley
is screwed.
companies. I don't know,
Zendesk is
Silicon
screwed.
Valley companies that my friends have worked at. Payroll, customer support, sales automation, all of these things, right? So the
Yeah.
investment in the data centers will like indirectly eat those companies. That's what I think. But yeah, is Nvidia? I was shocked. My mother went to her like investment advisor yesterday, and he told her to put a little bit, like a small percentage, but still buy Nvidia. I think that's like crazy to tell like a 60-something-year-old woman to like buy one stock that's like at all-time high after it's gone up so much. But who knows? What do you think?
Um, I agree with you. I think there could be well, there could be a near term bubble with Nvidia and OpenAI. The actor that I'm most worried about is OpenAI. Actually, I just don't trust Altman, and I think
Yeah,
there's something nefarious with him, and um,
it
the
could be
whole
the
thing.
Enron of AI. Like it could
Exactly.
just be poof, like the FTX of AI. It
Yeah,
could.
but yeah, with FTX didn't mean crypto went away. With Enron doesn't mean oil went away. The point is to just it was bad companies.
Also here, yeah.
I think the other thing is
Also, can I just say one
yeah,
thing? You
yeah,
build data centers. Let's say the company goes bankrupt. They don't rust away. Like someone will buy them
yeah,
and deploy them,
yeah,
right, to the model that's
yeah.
delivering more value. And another really good thing that David Sachs said is that all these doomers that are talking about something accelerating and becoming AGI and taking over the world and toppling democracies, so far there's zero evidence because the models are leapfrogging each other on different dimensions, right? So like what Google will be better than ChatGPT on one thing, ChatGPT will be better than Grok on another, and it's constantly changing, which is a very healthy sign. So
Yeah.
that means how can it be a bubble if the models keep like leapfrogging each other?
Um,
Like you think they're just
no, no,
delivering
no, no,
value that's
no, no,
not
no, no, no,
monetizable?
no, no. The bubble could be potentially in chips. That's why Nvidia got hammered because when Google got their own new chip, now there's competition. I still think there's a higher demand for chips, and it seems like every earnings report there's a higher and higher demand for chips. So I don't think that's going to go away. Um, I think at some point there's a lot that's going on, and I agree with a lot of what we're talking about. One, it's going to take us 8 years or so to build enough energy capacity. Two, the brain does a lot of this compute with 10 watts of power. We're not talking about these gigawatts. So we need to bring down the models. So at some point we could overbuild, right? The models come down, we have all this excess capacity until the model volume increases, and then you hit the capacity. That could take 5-10 years if we overbuild electricity. So because by the time we get electricity going, it'll be 8 years from now, and in the from year 0 to 8, we can reduce the model electricity needs. But you're already building these data centers, right? So we can have an overbuild, and then near term, and then in the midterm to long term, is going to even out for sure.
But
But
my measurement for overbuild, let's talk about that because that's actually something I'm listening to lots of AI podcasts. Nobody's talking about this point. How would you measure an overbuild? Okay. So like let's say you have X amount of power that's being built, X amount
yeah,
of chips that are being built. Let's say everything else doesn't matter, land and whatever, that's easy. But like how would you know if it's overbuilt? Because like the whole idea is, can someone create a startup around this model that's a wrapper that disrupts company X that's like, let's say, publicly traded, right? But you don't know that. By definition, you don't know that. You don't know because it hasn't happened yet. So in a sense, it is like the dot-com bubble that is like, oh, let's sell pet food online. You know, that's a great idea. And it's like, was there an overbuild of capital in that category? Yes, absolutely. But who the fuck cares? Like we did sell everything
no, for
online much better.
sure. But
So
look, more life is on a micro level, right? Like, it's who the fuck cares over 10 years. Agreed. But in between year 0 and year 10, you have to live life, right? That's the whole point. We're all doing this for time. I'm doing this for time. Time with the kids, time with the family, time with you, time to hang out, time to travel, and so on.
yeah.
Waiting 10 years is a kick in the stomach. You know what I mean? In the long run, we're right. It all equals out. I'm not saying we shouldn't do this. I'm just saying actually no one is talking about this. What is overbuild? If we have two forces at play, one, we need to build. Three forces. One, increasing demand, so build capacity. Two, right, regulation and like applications. You got to interconnect all the stuff. You have to modernize the infrastructure while you're building just raw capacity and compute. But three, there's also all these forces to make it use less and less electricity over time.
Yeah.
So it will meet somewhere in the middle. But once it meets somewhere in the middle, you're like, actually, I don't need as much electricity. You're already building the capacity. I'm going to stop a data center 75% of the way through. Because
Yeah.
one last thing, the bottleneck is not building the data center. The bottleneck is in the regulation and getting all the permitting done. So once you get that, building the actual data center doesn't take that long.
Yeah. Yeah. I know. And the idea is like we're
We're
just
building
chatting.
generation, electricity generation. Yeah, go ahead.
I don't think anybody's saying that there's a bubble in electricity, right? People are saying there's a bubble in either investing in the chips or
Yeah,
investing in the companies, but basically they say you spend too much money, right? And there's no, like, the stupid argument, right? You have to charge $35 from every iPhone user to make this give you 10%. What a stupid investment. That's kind of the steelman of like Wall Street. I don't remember which, like a serious newspaper, Bloomberg had
no,
had
yeah,
this
yeah,
argument. And I said, no, of course, yeah, it's going to be really hard to charge $35 from every iPhone user. But what about like $35,000 for every paralegal you
yeah.
replace? And then how many of course, you're not going to replace all the paralegals, but like, are you going to
For
replace
sure.
2% of the 3% of the paralegals? How many? And you go profession by profession and you just take half of the value. Let's say you capture half of the value, just like napkin math, and then you make more than 10% on your investment. Or here's another thing that I didn't hear anybody talk about, right? So you have the chips. Let's say you build too many chips, terrible. How many? Two questions. How many of these chips can be used for like robots or cars? And question number two, even if you couldn't use these chips for robots and cars, how much does the fact that you're manufacturing these chips make it cheaper to manufacture chips for robots and cars? Like, can you use the knowledge? Can you use the
Yeah, that's true.
facility?
That's a good point. It's all
Now,
it's fair.
nobody thinks that we're overbuilding robots and cars. We're only starting to use AI chips for robots and
Yeah,
cars. And so then the question is like, okay, fine. Maybe we don't deploy this for ChatGPT like chatbots. Maybe we deploy this for robots that clean the street in your block. Like your building can literally pay a service where a robot comes and cleans the entrance every day. Who wouldn't want that?
give me my robots, baby.
Not even inside your house. Let's start from like
No, for sure. No,
things that we
listen,
pay.
I think this is a good point. I'm just saying there's a lot of unknown unknowns in this thing. There's gonna be a lot of noise. It'll even itself out. But clearly we are in a civilizational shift. I mean, this is a fundamental shift in society and in everything. And it's look, maybe can I zoom out from an investing perspective, just on a
Mm-hmm.
human perspective?
Yeah.
Um, and this is my maybe the new spirituality, newfound. I, it's going to be, I think, a tough 10 years. Social strife and all. You will need to go to UBI. There's going to be mass unemployment. However, I feel very privileged and lucky to be living during these times. I mean, I think my personality, your personality, like this is very few people can say, and you and I, we've lived through the no internet to internet, right? No
Mm-hmm.
smartphone to smartphone, no AI to full AI, no robots to full robots. We're lucky. We are actually lucky and privileged to live through such a time, to see these things with our own eyes, to experience these massive, massive changes that our parents haven't seen before. They had major changes as well, but nothing to the scale. Like nothing. What facts to no facts to facts. Okay, no phone to phone. We're not talking about new intelligence. That's an apex intelligence in on the planet. That can end with robotics that can wipe us out. Like I don't know. It's kind of thrilling to me almost in a weird way. Like it can. It's there's a line of a song. It's like everything that kills me makes me feel alive. It's
Mm-hmm.
like it's this thing of our thesis and everything we talked about and our love for technology and humanity is driving forward. I just feel very lucky. And I feel lucky to actually do this with you. Like we think in a similar way, we talk about these things, and very few people out there actually understand it on our level. I'm not saying it's right or wrong, it's our level. We've been right in investing so far. Um, so it's hard to see the world in the same way. I think most people are kind of stuck in this N+1 mode. Oh, this AI is helping me, but I gotta check it. I think they're missing the bigger picture completely altogether. So yeah, I'm just want to say thank you because I'm excited to go through this with you.
Yeah, absolutely, me too. And it's pretty cool that we've been having these ideas since 2019, like it's like 6 years, and we're actually seeing them materialize. Like I remember we had one of our first episodes when we're talking about the roaring 20s or whatever, and we're talking about how people will get exposure to Bitcoin through the index funds. And it was ridiculous. I mean, not ridiculous. We knew it would happen, but it was so ambitious at the time.
Yeah,
And 6 years later, it's actually happening. So that's pretty cool. And I love your optimistic take. Look, I know it's gonna be turbulent, and I'm depressed when the price goes down. It's hard. We're human, but I think being grateful about these times is so important, because like at the end of the day, we can choose to be grateful, or you can choose to focus on all the all the AI will kill us all, and yeah, you can't prove that AI won't kill us all, but I actually heard a really cool take. The fourth turning. Have you heard of that term? The fourth.
yeah, yeah,
So it's this theory for our listeners. If you don't know, it's basically like that. There's cycles of 80 years in
yeah,
many things in life, right? But basically, the idea is like you have, let's say, a first generation that does something. Each generation is 20 years, right? Then the next generation, they lived through that thing, so they still hold these values. The third generation only heard about that stuff, so they still hold these values, but they don't act on them as much. And then the fourth generation, they don't even hold these values anymore, and that's when societies collapse. So you have many such kind of examples. For example, if you look at, I don't know, here you have World War II in 1945. Then, like, if you go before, you had like the Civil War and stuff like that, and it's all these generational changes. So many people say, "Oh no, the fourth turning is upon us, and the economy will collapse. Everything will be really bad." And they have all this analysis of like why the fourth turning is upon us. But I'm thinking, I heard someone say, "What if the fourth turning started with 9/11?" Because just think about it. It's like
Yeah.
9/11 was peak prosperity. US was peak power globally. The USSR had just collapsed. The economy was no national debt, in the 90s. The internet, everything was like peak. Then 9/11 happens, and then it's like it was part of the dot com, right? But then think about it. We're literally 20, we're at the end. We could be at the end of the fourth turning. So Bitcoin was born kind of in the pain of the global financial crisis. Imagine that's like 8 years into the fourth turning. Then you had all this like, war with Russia and Ukraine. That's 2022. So that's like, 20 years into the fourth turning. And then now we're slowly coming out of it, and Bitcoin's growing and everything's kind of, technology. So you could make the case that it's only up from here, that the hard times are over. Now, of course, stock market being at an all-time high, it's hard to say something like that. But then again, if you draw a 100-year graph of the stock market, you could have picked any all-time high. As long as you waited enough, it was good.
Yeah, as long, but this is why we love to invest in technology, and I think it's important. People say, well, S&P, Nasdaq, everyone is a zombie company, and compared to the Nasdaq or compared to the tech companies, and it's okay that like tech companies have an overweight uh, share of the S&P 500. Some people think it's bad, and maybe technically in the short term it's not the best. It'll even itself out, but in the long term it makes a lot of sense. They're capturing most of the value. Most of the value is going to AI. It's not going to freaking, I don't know, Target. With all due respect to Target, which I love as a store. But it's like one is making robots that are taking millions of jobs out of cost. Like when I'm talking about the human aspect of it, and the other is selling a 3% net margin. So it's like obviously, where else
Yeah.
is the value going to go? All right, man. Look, it felt good to do this again. It's
Yeah,
been
I
a
feel
while.
that we touched on many themes that we've spoken about
Yeah,
before, but we also came up with some new ideas. So thank you. And from now on, we'll be doing this
we
more
should do that.
frequently. Sorry that
Yes.
I was in my car. I had to go to a meeting, but good to see you. And please leave us feedback about what you think.
Ciao, ciao.
Till next time.